Hey guys, how's it going? Venture Investing here today. So, I hope you guys are all doing well. It's been a complete onslaught as of lately. And like I said in my last video, I think it's probably going to continue for a while. But today we're going to be talking about Villages Farms Q4 2019 and their 2019 annual report that came out. Stick around to the end. I'm going to let you guys know what I'm actually going to be doing with my shares. Maybe a little bit of insight that you might not be expecting from me. So stick around for that. Taking a look at the stock, I mean, this thing has just been absolutely hammered as of lately, just being punished. And of course, after these results, it didn't do much better as they were not received very well. So the first thing that we're going to do is we're going to look at the press release that they put out. This covered Q4. And I went to the Securities Exchange Commission and looked through the year-end results as well. So I pick out a couple things from there as well. So taking a look here at their news release. Of course, we have the normal blurb up top here. You guys can read this if you want. Pause the screen. I'm going to go through just some, bullet points that I found were interesting and that were relevant. Taking a look at this section here, Villages Farms financial results for the year ended December 31st, 2019. So this is in total for the entire year. Produce sales were 144.6 million compared to 150 million. Of course, we've seen this, this segment of the company just being under a lot of pressure, not doing very well. I mean, it's still substantial, but it seems to be doing worse and worse every quarter. Net income was $2.3 million US. Which included the positive net incomes from Pure Sunfarms of 16.3 million, and that's of course US, and 21.7 million Canadian. So I also wanted to mention here that something that's a little bit confusing with their financials is there's a lot of US and Canadian things going back and forth. So sometimes they quote things in US, sometimes they quote things in Canadian, and quite frankly, the way they put it sometimes almost seems like they're doing it as a specific reason. So just keep that in mind. I'll try to note that. But unless otherwise noted, they say it's going to be in US dollars. The best thing about this report is earnings per share were 5 cents, and that's for the entire year, of course. And this was compared with a loss of 17 cents last year. So that's probably the most positive thing that came out of this. Adjusted EBITDA, earnings before income taxes, dividends, and amortization, was about $900,000, including the positive contribution from Pure Sunfarms of 20.6 million US dollars. So that was Villages Farms' proportionate share. So this compares with an adjusted EBITDA of $2.6 million for the year before. Now looking at Pure Sunfarms, so this is the joint venture, of course, between Emerald Health and Village Farms. Net sales, and of course this is before Villages Farms' proportional share, and this consisted entirely of dried cannabis, were $82.8 million Canadian, like it's going Canadian here first, so that's about 62.3 million US, and that's again for the entire year, and that was compared to 4.9 million Canadian last year and 3.7 million US. Gross margins were, very nice. Actually, those have increased a little bit. Gross margins were 76% compared to 69%. Selling, general, and administrative expenses, of course, this is before the proportionate share, were 10.4 million Canadian or $7.9 million US. And of course, this was compared to 3.4 million or 2.5 million US. So we've seen, of course, this increase significantly, but of course, that is to be expected. Net income, of course, this was before Village's proportionate share again, was $36.5 million Canadian or 27.4 million US. So now they've broken it down in terms of the fourth quarter. So this is 3 months. This is generally what you'd like to compare quarter over quarter. Produce sales were 33.1 million. This was compared to 38.8 million. And of course, we're comparing this on a year-over-year basis. So that falls in line with the year-over-year basis from the whole year of 2019 to the whole year of 2018. The net loss for this quarter was $7.2 million US, ouch. And this included the positive net income from Pure Sunfarms of 1.8 million or 2.3 million dollars Canadian. Of course, this compares with a net loss of $2.4 million US. The loss per share was 14 cents US, and that was compared for a loss of per share of 5 cents US last year. Of course, they talk about how they've been issuing shares. I don't like this the most. There has been dilution, so you can read that as you'd like. This was probably the more interesting. Of course, you guys might be aware, I hope you're aware of the dispute that's been going on between Emerald and Village Farms. So there's been a little bit of a legal action. So Village Farms actually increased its ownership of the cannabis joint venture, Pure Sunfarms, to 53.5%, and that was at December 31st, 2019, and subsequently to 57.4% as of March 3rd, 2020. And listening to the conference call, it sounds like that's going to increase. I wouldn't be actually too surprised if going forward they ended up taking the majority of it or all of it. So now taking a look at Pure Sunfarms for the fourth quarter. Of course, this is the joint venture. Net sales, and of course this is before Village Farms' proportional share. This was the entire thing. Consisted entirely of dried cannabis, was $12.1 million Canadian, or $9.2 million US. So this compared with 4.7 million Canadian and 3.5 million US. So, big increase over last year. Again, the gross margin was 74% compared to 71%. That's great to see. Selling, general, administrative expenses have increased significantly as well. And of course, net income before Village Farms' proportionate share of $4.4 million US, or Canadian rather, and $3.3 million US, compared with 1.8 million Canadian and 1.4 million US. This is a point to pay attention to here, as well as the top line, is that there was this wasn't all just strictly sales. Some of this had to do with the settlement coming from Emerald. So this is one thing that I haven't liked too much about this earnings report and what's been going on lately, but we'll get into that in a little bit here. Some of the recent highlights, if you haven't been paying attention, for Village Farms cannabis joint venture, Pure Sunfarms, is it launched its branded products in Alberta, increasing its market presence to 3 of Canada's 4 most populous provinces, also including Ontario and British Columbia, or nearly 2/3 of the Canadian recreational cannabis market by population. Of course, they like to tout that they're the top selling brand of dried flower with the Ontario Cannabis Store, so that's the OCS, by both dollars sold and kilograms sold for the year to date ended February 29, 2020, achieving a 13.5% market share by kilograms sold, with 2 of the top 4 dried cannabis products by both dollars sold and kilograms sold at the top selling dried cannabis product by both dollars sold and kilograms sold. So a bit of a mouthful there, but of course the takeaway is that the product is very popular. My concern has always been how much demand is there for it, even though it's the most popular, but we'll continue on here. One of the newest notable things they did was they launched a new format 28 gram, 1 ounce, high quality cannabis product. And of course, this was extremely competitive in terms of its price. And of course, the approval from Health Canada to operate the final components of its 65,000 square foot state-of-the-art processing center down in Delta there. So you can read all that. I'm not going to go through all that, but if you haven't been keeping up on the news, that's it right there. They're also stating that they continue to prepare for the introduction of new product forms under Cannabis 2.0. This is something that I'm very interested in to see what happens with this. Not too much news so far, but they're saying it's expected to commence in the second half of this year, and expanded its credit facility with its existing lender to $59 million, including according provisions of $22.5 million. There's been a lot of speculation of that about being able to buy Emerald right out with that, because it's getting pretty close to their market capitalization of Emerald. I don't know about that, but that is interesting as well. Now, before we go into their financials, I wanted to run through this really quickly because it kind of ties into their financials. There's a lot of stuff, at least for me, maybe I'm not so smart, that was kind of confusing because some of this was lumped in and broken out in different ways. So I think it's very important to understand this first. So Pure Sunfarms, that PSF stands for Pure Sunfarms. For the last quarter, they sold 1,100 kilograms. Now, this is a huge disappointment because I guess they've shifted away from wholesale and they're trying to go to retail at an average price of $3.59 Canadian. So that's $3.9 million Canadian sold in the last quarter, or 2.78 million US dollars. And usually they're trying to keep everything in US dollars, so maybe keep that in mind as well. So their net income was 4.3 million Canadian, or $3 million US. And you look at that and you go, well, how can that be the case? If their revenue was 2.78 million US and their net income was 3 million, that doesn't make any sense, right? So this is something that makes is confusing. They actually, through this settlement, Emerald is essentially contractually obligated to buy a certain amount from Pure Sunfarm, which is a joint venture. And if they don't, they're obligated to pay the difference from what is sold on the open market. So $8.1 million, and this is actually Canadian dollars, I believe. I'll erase that. Maybe I should put that there. 8.1 million Canadian dollars, correct me if I'm wrong on that, was paid out. So that's how the majority of this net income was arrived at, is because this was the difference that was paid. So, I mean, we'll get into this in a little bit. I mean, I think this is the biggest thing that people are like, where did this money, how did they only sell 1,100 kilograms, right? And the rest was just basically disposed of or whatever. So anyway, that's something to keep in mind going forward. So let's take a look at their financial statements right now. So the first thing we're going to look at here is their summary results without the joint venture. Again, this is in US dollars, and this is for the last quarter. It's comparing year over year and quarter over quarter. So pause it here if you want to take a look. But again, we kind of went through this. Produce sales were about $33 million versus 38. Cost of sales actually increased as well. Stock-based compensation expense is something I'm going to talk about. Increased marginally as well, which I'm not particularly happy about. Of course, the share of income or loss case, of course, in this last quarter, it was a loss of $338 million is included in there as well. And then we see the net income of this quarter being $7.1 million, and that's a loss of $7.18 million compared to $2.4 million the year ago quarter. So, you know, that's not great. But if you look at it on a year over year basis, of course, we're showing, you know, positive net income there. So people are, of course, focusing on that. EPS for the last quarter were a loss of 14 cents. That's a deeper loss than the 5 cents last quarter. But of course, on a year over year basis, looking on 2019, we have a diluted EPS of 5 cents a share, giving this company a positive EPS. So now they're showing the summary results, including the joint ventures on a proportionate basis. Now, this is why I'm not so happy with Village Farms right now, is that I get what they're trying to do. I get that they're trying to show more information, but it really causes a lot of confusion because, as I said before, 2019, the produce sales were $33 million. Now we're looking at consolidated sales of 38.1 million. So this is including, of course, their proportionate share. So you can take a look here how things are slightly different, but for the most part, other than, you know, showing higher expenses and higher revenue, the same. So of course, if you're looking at this, you want to be able to see, well, how is this actually broken down? So I really appreciated that they broke it down. They're calling this reconciliation of GAAP to proportionate results, right? So here, this is for the 3 months ended, of course, last quarter. They're showing produce, Pure Sunfarms, so that's the Pure Sunfarms proportion for Village Farms. Of course, not the whole thing, and that's a little confusing as well. The hemp and the total, and it goes down and it breaks it down by section. So the one thing I want to point out here is in sales. Of course, produce we know was $33 million, but it's misleading in my opinion. I don't know how else they could have represented this. Maybe you guys can, you know, give me a better idea, but they're saying $4.9 million, or, you know, roughly almost $5 million. So you're taking a look at this and you're going, wow, $5 million from Pure Sunfarms. Now you got to keep in mind that's just what's proportionate to Village Farms. That's not all of Pure Sunfarms, because it's split between Emerald Health and Pure Sunfarms. But then you come over here and you take a look and you go, okay, well, $5 million. I mean, maybe this is just me, just confusing me, showing that as revenue when all of Pure Sunfarms only made $2.78 million US. And of course, they've originally represented it as Canadian dollars, so I had to do the math. And of course, this is with the exchange rate of today, which changes, so you gotta, you know, not much transparency. So you're like, well, what the hell's going on? But then you realize, well, yeah, we had the payment from Emerald Health, but that was for Pure Sunfarms as a whole. So of course, Village Farms doesn't get all that. So their proportionate share of that plus that equals what you're looking at on the screen right now, the $5 million. So in my opinion, that's just really confusing and it's kind of misleading. Again, I don't know. Tell me what you guys think. It makes sense, but the way that I look at it is, if this is basically the difference between what they can't get when they're selling it to other wholesalers, what does that say for the industry as a whole? Like, if you can't sell it for that, and their Emerald is having to pay the difference. I mean, what is the chances that you're going to get that when Emerald is out of the picture? I don't know. Is the demand there? That's questions you got to ask yourself. But anyway, going forward, you can take a look at that. Hemp, we had I think that's $69,000 there. So that brings us to the $38 million total that we were looking at above. So I like the way that they broke this out. The only other thing I'd like to mention is, looking at the produce and the Pure Sunfarms, comparing the sales to, the SG&A, selling general and administrative expenses. I mean, it's pretty, it's pretty high when you're looking at, in terms of Pure Sunfarms, it's pretty high when you're looking at the $1.2 million versus sales of 4.9, and part of that was actually a settlement. That's a huge percentage when you compare it to the produce, which is not doing very well, right? You're only looking at about 5 million versus on $33 million, right? So not really happy at all to see that. But if you look down below here for last year, it's actually gotten a bit better, of course, because of course the sales for Pure Sunfarms have increased. Well, they've increased in terms of total with the payment from Emerald, but it's definitely gotten better. So not as horribly bad as I thought, but still not something I like. So hopefully that makes sense to you guys. I mean, I kind of been banging my head off the wall looking at this and really trying to interpret it and trying to figure out what it means. So, again, leave a comment down below if you tend to disagree with me. So the next thing we're going to look at here is what was posted on the Securities and Exchange Commission, and this is on a year-over-year basis. Now, this is the way I think it really should be presented, but it looks worse, and that's something I kind of have problems with in terms of transparency with the company right now. But it gives the years ended for 2017, 2018, and 2019, and of course the top line sales here seem very concerning, and I think this is part of the stock reaction. We went from 158 million in 2017 to 150 million in 2018 to 144 million in 2019. So just getting hammered, and the cost of sales is increasing, the SG&A is increasing, right? So the only saving grace is the share of income or loss from the joint venture, which was getting close to $14 million in 2019. So that's what actually gave us a year-over-year 5-cent EPS. So by looking at this, you really got to realize you're like, even to have close to the valuation that Village has right now, that share of income from the joint venture is critical. Like, that's going to be the lifeline. And what is going to be going on with that? What's happening going forward? Well, we kind of already discussed that. The sales were not that impressive. Where did the rest go? I don't know. They blame it on timing. Listening to the conference call, they really didn't, mention it too much. They said, oh, it was timing, but I feel like they're always saying that it's timing. Oh, we missed we missed a big order on this, and it seems like it's that every quarter. And I realize that people are that extremely bullish on it. Maybe you're looking at it like way more detailed or way more further ahead in the future than me. But there's some concerns there for sure. And the fact that when I listened to the conference call, this was just basically skipped over, nobody asked about it, that's extremely, extremely concerning to me. So continuing on here, I found this chart pretty helpful as well, because this was broken down just like the one we looked at before, the one from the Securities and Exchange Commission. And this is for the entire year, and it breaks down produce, Pure Sunfarms, hemp, and the total as well. So you can take a look, pause it there if you want. It was nice to be able to see the EPS for Pure Sunfarms, the portion of it that was attributed to Village Farms, 33 cents. So, that's very good to see. You can see that we're, at about a 23 cents loss for the produce that hasn't been doing very well. And then we can, of course, look at the company as a whole. If you want, you can compare it to the year end in 2018. They give this as well. There was no hemp. Produce was there. It was stronger. The EPS was less for produce. But look at the transformation in Pure Sunfarms. Of course, we had nothing near what we have right now. So is that going to continue? Well, that's the question that we're asking. In terms of their cash flow, like seeing what they're doing with their cash, it's concerning to see, the amount of cash they're going through. Understandable, we know that's going to happen. They're building cash by, issuing debt, diluting shareholders with equity. But the cash at the beginning of the year was about $11.9 million, and they burned through, for the year ended, operating cash flow about $14 million they burnt through. They invested another $16 million, almost $17 million. And of course, through financing activities, they were able to raise $31 million. So the net increase or decrease of cash, they had a net increase of cash of $162 million. So the cash at the end of the year was relatively similar to last year, but it's definitely good to see what they're doing. They're operatingly, going through it, blowing through it operationally speaking, and gaining it through investing, or gaining it through financing activities, and of course investing a lot as well. Sticking with the theme of things I really don't like, this one there's going to be a lot of debating about it. It's the executive compensation. You can look at the chart here, seeing how much they make. I know this is not like a lot for executives, but you got to keep in mind, I don't know, we're still struggling. We have a lot of issues. We're fighting with Emerald. How much demand is there? And when you're in a situation like that, the company needs the money, right? So we see the CEO, his salary is over $660,000, which is like, okay, whatever. But then he's got option-based reward, share-based reward, so his total compensation is over $2 million. And for a company that's really, in my opinion, struggling a lot, I don't know, you can look at all the other guys too, what they make. I realize compared to some other companies, it's not that much, but I think considering we have some hard times going ahead, why are they taking taking that much? If you look at their cash flow again here, I just want to highlight the share-based compensation. Net cash used in 2019 was over $14 million, and if you look here, share-based compensation, they almost did $5 million on that, right? Like, look at the difference that could make in terms of the cash that's used. They're using pretty. I mean, if they continue with this, it's gonna be like half. I mean, I know it's not half, but you're looking at almost $5 million of share compensation. As a total of $14 million that's cash is being burned through. I just think that's unacceptable, right? And the other fact is that none of the executives that I'm aware of are even buying stock. I mean, they're making all this money. That doesn't show any faith in the company whatsoever. And of course, before every earnings, somebody seems to be dumping the shares. It seems like there's a leak in the company or something. Of course, I don't have any insider knowledge of this or whatever, but they're not buying, and it just seems real dubious to me. The other thing that I want to show you guys is the Pure Sun Farms. Let me write this here, right here. Pure Sun Farms. Now this is their total revenue, right? So when we're going through those financials there, I was saying the way you're looking at it is like the vegetable business is not doing very well. You want to bank all your eggs in one basket on this. People always talk about timing and this and that, and I realize that this last quarter, some of the issues were the fact that they're going into retail, like selling to the Ontario stores and stuff like that, whereas before they were doing more wholesale, and that's their excuse, and that's why the numbers are not good at all. But if that's the case, why aren't you selling to some wholesale? I mean, leave a comment down below if you guys know a little bit more about this, but why are you damaging the company that much? So this is the bread and butter. Q2 2019, of course, these are in Canadian dollars. They had $32 million, Pure Sun Farms, in revenue. Q3, which was the quarter before this one, $20 million. Huge hit. And of course, this one, we had $12.1 million in revenue, and that included the $8.1 million that came from Emerald as well. So looking at this, I mean, this is why the stock's responding the way it is. It's very concerning. It's still great on a year-over-year basis because things have increasingly got better, but quarter over quarter we see this trend. And now with the stock price, I can't remember what it is, 3 something American, the PE that I looked at was over 50. I mean, with these earnings, the PE is over 50. That's a huge PE for a company that is going down. I mean, year over year, it's doing good, but I mean, a high PE means that, the expectations is that the earnings are going to increase significantly. So these are some of my concerns. I really hope that I presented them in a way that made sense, because it's a bit confusing the way that they put it to me. And I tried to curate the information, give it to you guys in a way that was a little bit better, I think, than what they presented. So, if you could think of a better way of, showing it or whatever, or you had some comments about it, leave it down below. But those are definitely my concerns. So what am I going to be doing? Okay, I do see like years and years and years and years, because year over year basis, we see some, definitely some growth here. There being potential. But of course, like I've always said, demand has always been my biggest concern, underlying demand. And when you see this, which is basically the difference in, the money they can't get, as far as I'm aware, correct me if I'm wrong, on the market trying to sell wholesale, and then, the difference in cost. Then you see the numbers as a whole coming down. We see all the issues with the industry. I don't think underlying demand is as great as we think it is, at least right now, right? So that's my biggest concern in terms of the financials. But the bigger problem for me is transparency with the executives, amounts of money that they're taking and stuff like that. I think that this could have been conveyed way better. And the number one thing you should be looking at when you're investing in a company, you should be looking at the executive teams, the leadership. And to me, sometimes, to be honest, some of it is just a bad feeling. Like, I just get a bad feeling of some of the things they do. And the first couple times, I, kind of brush it off, and now I'm just starting to get a very uneven feeling, and feeling like maybe it's time to exit. I know I made the video. I'll try to find it. I'll link it up here right now if I can. The first one I made when it was trading Canadian, I think it's $6 or $7 Canadian, then it ran to 25. If I was following my own advice, I would have sold. Those are the times you need to sell, but we all make mistakes, even me, and it's great to learn from them. And now look at where we're at. I think I'm at quite a bit of a loss, maybe 40% loss. I don't have a huge amount of money in there, but all this is a lesson as well, right? Everybody makes mistakes and everybody gets caught up in things. That doesn't mean long term it's not gonna do great. If you are holding and you think that my concerns are unwarranted, and that long term this is going to be amazing, and the executive team is extremely strong, of course leave that comment down below. And for everybody that holds shares, I really do hope it does very well. But where I'm at right now, I have it in Canadian dollars. I'm thinking like 450 I might be out. And aside from all the things that I've said right now, I think with the market tanking down like it is right now, there's a lot more opportunities. There are things that are going to climb a lot more. Of course, when the market recovers, this is going to recover a lot as well. But the question is it going to recover as much as some of those other things? Like, I'm looking into some companies like Air Canada, which could be phenomenal. Even some nice dividend ones like Fortis. I just talked about Fortis in one of my other videos. I just think there's a lot more potential there. And when I don't see what's going on, that's probably what I'm going to do. Not trying to shit talk the company, guys, but definitely think that there's some big concerns going on there. Going forward, we'll see what happens. I might continue to make videos on them. If I'm out, I might not. But if definitely there's big news, I'll keep you guys updated. Leave a comment down below if you want me to continue making videos about them. And of course, leave a comment down below what you think of this quarter and what do you think is going to happen going forward. Anyway, that's going to be it for today, guys, and I'll see you in the next one.